India's biggest tax reform, goods and services tax, is set to have a major overhaul. The government is planning to revamp goods and services tax. So, what does this mean for Indian companies and businessmen? I'm Sachin Dave, Senior Editor with Economic Times, and we'll try and explain what is set to happen and what impact this could have going ahead on companies. In 2017, the government brought in the biggest tax reform, goods and services tax. What the government did was it subsumed other indirect taxes into one tax. The government branded it as one country, one tax. However, what has happened since then is that there have been a lot of issues that has cropped up in goods and services tax. The goods and services tax was essentially supposed to be one tax, one country. However, as the time went, the government had to come out with clarification after clarification, and there were court cases and there were advance rulings that only made the waters murky. As of today, there are five tax rates: 0%, 5%, 12%, 18%, and 28%. The 0% tax is essentially levied on certain necessary goods. The 5% is on goods that are perceived to be consumed by the lower strata of the society, lower economic strata of the society, such as basic biscuits or chappals for that matter. The 12% and 18% are in some way fluid, which means that depending on the definition of the goods, often companies tend to levy either 12% or 18%. Although there is a precise definition as far as the law is concerned, but often companies tend to use this for their own advantage. The 28%, that is the highest bracket of GST, mostly is levied on the luxury goods or one of the high-end goods. The government is planning to rationalize the rates. That is, the number of rates might be brought from 5 to probably 3. Now, it is still not decided which 3 rates would be implemented. Probably the government might just mix, or there would only be 3 rates, probably 5%, 18%, and 28%. That is what our sources tell us.
The GST Council will seriously consider rate rationalization because of a couple of reasons. One is certainly the classification dispute, and we have seen a lot of these classification disputes between the 12% rate and the 18% rate, such as right to use versus transfer of right to use, and so on and so forth. And of course, I think the government's intention right now is to augment the revenue collection, and hence this rate rationalization will be more tilted towards augmenting this revenue collection. And of course, the agenda will remain to improve tax buoyancy, because there are a lot of projects which need to be completed in next couple of years. So I think this rate rationalization will have the multiple effect of improving the tax buoyancy, augmenting the revenue collection, and reducing the classification disputes.
So when the government came out with goods and services tax in 2017, the states felt that the revenues will be impacted. The government said that for the first 5 years, it will compensate the states. Now this 5-year period is all set to get over, and the government will go back to its original plan of one tax, one nation. Now this is supposed to also face probably some resistance from certain states.
There could be some disputes between the state and the center when it will come to rate rationalization because of specific state demands. We know for a fact that there are certain populist products for which certain specific states would not want the rate to increase. Similarly, the states must realize that from every penny which they get from the GST collected, there is a share which will come to their kitty as well.
main impact that such a rate rationalization will have is that this may give certain clarity as far as companies are concerned. There have been numerous litigation, hundreds of advance rulings, probably writ petitions have been filed as far as tax clarity is concerned. If the government comes out with say lower number of taxes, these litigations could be avoided. Also, if the government reduces the number of taxes, the tax rates, this could also shut certain doors for Cess. The other impact that you could see is on the companies. Now, the companies up until now obviously wanted to be in the lower tax bracket. Now that would be removed, and many companies would or probably could still take the government to court over some of the legacy taxes or tax credits that are concerned. What the other impact that this rate rationalization could have is that certain exemptions might just go away. The government had initially envisioned that the average tax collection rate could be anywhere around 15.5%. The finance minister recently said that has dropped to about 11.6%, which means that the tax collection, as far as the government is concerned, has reduced. Although if you just look at the numbers, the monthly numbers, number of tax collection, that has zoomed in the past couple of months. It is yet to be seen what is the impact the tax collections will have or government's revenue will have if this rate rationalization is implemented. Government would really want this to be done and dusted as early as December in the upcoming GST Council meeting.